good evening, my dear students. This is CA Tawfiq Tufail, and we are in the day 3 of FM workout batch. So, during day 1 and day 2, we have discussed the introduction to financial management, and we have went through the concept of leverages. And in the yesterday's class, we have solved lot of questions from leverages, and we have also seen the importance of leverage in the examination. So if you have seen, mostly in the examination, a 10-mark problem for leverage is asked. A 10-mark problem for leverage is asked, and sometimes 5-mark problems is asked. Okay, so 10 marks problems, mostly they will ask 10-mark problems. There is a high chance that even in the coming examination, there can be a question of a 5-mark or a 10-mark. So definitely one question is definitely there in leverages. So we have solved, almost around more than 10 questions we have solved in the last class, and now we will be solving, one or two more questions with some more points, and then we will be going on to the next topic. Okay. So we are here, okay, in the last question paper that we are having, which is previous year question paper, November 2022. So if we, okay, all the other papers, okay, let me just give you a preview. But if I want to give a preview, this is the question book. Okay, this is the question book that you will be getting. It is dispatched, so you will be getting this question book now. In this, all these problems we have solved. Okay, in this, all these problems we have solved. Even May 2022, we are having a 10-mark problem. Even November 2022, we are having a 10-mark problem. Okay, November 22 problem we are going to solve now. Okay, we are going to solve now. All other problems we have solved. Okay, from May 2018 to May 2022, if you see 1, 2, 3, 4, 5, 6, 7, 8, 9. So total 9 and 10 attempt. Okay, 10th attempt question paper we are going to solve now. And also we have solved 2 revision test papers. So revision test papers I will be, because it is revision, so I will be, for you, I will give it for your practice, but mostly it will be the repetitive question that we have already covered. Okay, nothing new points will be there. One new point alone is that problem alone I am going to do in the classroom. Now, let us go to this. Okay, November 2022. So page number 371. So if we go to page number 371, we are having November 2022 question paper. Now in this November 2022 question paper, the first one is a working capital management problem. Second one, second one is a ratio problem. Question number 3 is weighted average cost of capital. So cost of capital chapter. And fourth is out of syllabus. Now question number 2 is a leverages 10-mark problem. Okay, it is a leverages 10-mark problem that I told you that I am going to solve. Now, are you all ready? Just give me a thumbs up that yes sir, I am ready to solve the problems, because we are continuing with the same momentum where we ended. Super. Now let us read the problem first. Okay, let us read the problem first. Profit volume ratio 30%, operating leverage 2, financial leverage 1.5, loan is equal to 1,25,000, post-tax interest rate is 5.6%. Okay, so loan left pre-tax interest rate is usually pre-tax. Post-tax interest rate kuduthirukanga, what we have to do, that post-tax interest ratio, post-tax interest rate we have to convert it into pre-tax. So any number from pre-tax to post-tax we have to do into 1 minus t. From post-tax to pre-tax we have to do divided by 1 minus t. So this is what is the small point. Tax rate is 30%, market price per share 140, and price earning ratio is 10 rupees. Okay, price earning ratio is 10 rupees. What is price earning ratio? Price earning ratio is nothing but MPS divided by EPS. Okay, MPS divided by EPS. So with that actually you can find out the EPS also. Okay, price earning ratio is nothing but MPS divided by EPS. Okay sir, till now, are you all comfortable with the question? Now let us start. Okay, now let us start. So let us start with the previous year, November 2019. Okay, so previous year, November 2019. Okay, so previous year question, November 2019, question number 2. Any problem in leverages, always remember first step income statement. Okay, first step is income statement. Let me just a moment. Class in class. Okay, just one. Let me just silence my phone. Okay, so this is question number 2. Okay, so this is question number 2. Now, first step is that we have to prepare an income statement. Okay, we have to prepare an income statement. So let us start. Sales minus variable cost is equal to contribution minus fixed cost is equal to EBIT minus interest is equal to EBT minus taxes is equal to PAT. Okay, PAT. If I divide my PAT, okay, if I divide my PAT with number of equity shares, I am going to get earnings per share. Okay, I am going to get earnings per share. Okay, sir. Till now it is all okay. Now, what data is given in the question? Okay, what data is given in the question? First, we have to see. We have to go from that data. First is that's a loan data is given and post-tax interest rate is given. So, in the rendu data which actually we can calculate the interest amount. Now, working note number 1. Interest. Sir, how will I calculate interest? Interest is nothing but loan amount into interest percentage. Okay, loan amount into interest percentage. What is my loan amount here? 1,25,000. So 1,25,000 into, I have to put my interest percentage, but interest is usually pre-tax. Okay, so here it is post-tax 5.6 percentage. So this 5.6 percentage I have to do pre-tax. Any pre-tax number, if you want to convert it to post-tax number, you have to do 1 minus t. Okay, so before tax number into 1 minus t panna, you will get after tax number. Here after taxes number is given. You want to find out before tax number, so you have to do 1 minus t divided by 1 minus t. So divided by 1 minus 30 percentage. Now tell me what is 5.6 divided by 70 percentage. Tell me what is 5.6 divided by 70 percentage. 8 percentage. So 8 percentage is my interest rate. So what is 1,25,000 into 8 percentage? Quickly, what is 1,25,000 into 8 percentage? 10,000 rupees. Okay, so my interest amount is 10,000 rupees. Super. Okay, so my interest amount is 10,000 rupees. Okay, sir. This one thing is done. Okay. Now I already told you, if interest is known, financial leverage is known, you can calculate EBIT. Okay, I know what is my financial leverage also. Operating leverage to financial leverage 1.5. Okay, operating leverage to financial leverage 1.5. Working note number 2. Operating leverage to financial leverage 1.5. Appa what is combined leverage? 2 into 1.5. What is 2 into 1.5? 3. 3. Correct? Combined leverage is 3. Now, financial leverage is equal to EBIT divided by EBT. So I can write EBIT divided by EBIT minus I. What is my financial leverage? 1.5 is equal to EBIT divided by EBIT minus 10,000. Now this will all go here. So 1.5 EBIT minus, what is 10,000 into 1.5? What is 10,000 into 1.5? 15,000. 15,000 is equal to EBIT. Now this EBIT will come here, so 0.5 EBIT. So EBIT is equal to 15,000 divided by 0.5, which is nothing but 30,000 rupees. So what is my EBIT? My EBIT is equal to 30,000 rupees. If my EBIT is 30,000, interest is 10,000, what is my EBIT? 20,000 is my EBIT. If my EBIT is 20,000, and what is my tax percentage? It is 30%. So 20,000 into 30%, 6,000. What is my PAT? 14,000 is my PAT. Okay. Now I can also find out my EPS. Correct. A price earning ratio is given and market price per share is given. So I can calculate my EPS also. If I can calculate my EPS, I can actually find out my number of equity shares. Next, how to calculate my EPS? So price earning ratio is given, right? Now working note number 3. Before that, let us calculate contribution. Using operating leverage, you can calculate contribution also. EBIT is known. So EBIT is equal to 30,000. Now operating leverage is equal to contribution divided by EBIT. What is my operating leverage? 2. So 2 is equal to contribution divided by 30,000. Therefore contribution is equal to 30,000 into 2, which is nothing but 60,000. So what is my contribution? 60,000. So 60,000 is my contribution. If 60,000 is my contribution, 30,000 is my EBIT. What is my fixed cost? 30,000 is my fixed cost. Okay, 30,000 is my fixed cost. Now PV ratio is given. Okay, PV ratio is 30%. What is PV ratio? Contribution divided by sales, which is nothing but 30%. Okay, contribution divided by sales is 30%. So now PV ratio is equal to 30%. So contribution divided by sales is equal to 30%. What is my contribution? 60,000. So 60,000 divided by 30% is equal to sales. So what is my sales? 60,000 divided by 30%. So what is 60,000 divided by 30%? 2 lakhs. Hello. Sales is equal to 2 lakhs. Now my sales is 2 lakhs. 60,000 is my contribution, which means 1,40,000 is my variable cost. Now let me calculate my EPS. Sir, how will I find out my EPS? I know my P ratio. Correct? I know my P ratio. What is my P ratio? My P ratio is equal to 10. My P ratio is equal to 10. Okay, so P ratio is nothing but MPS divided by EPS is equal to 10. Market price is given, which is 140 rupees. So EPS is equal to, okay, EPS is equal to 140 divided by 10 is equal to 14 rupees. Okay, so 14 rupees is my EPS. If 14 rupees is my EPS, PAT is 14,000. How many number of equity shares I'm having? 1,000. Are you all with me? How many equity shares I'm having? 1,000. Now let us check the answer. Okay, let us check the answer, whether the answer is correct or not. Okay, everyone, okay, just keep a fingers crossed. Let us check the answer. Let us check the answer. 2 lakh, 1 lakh 40, 60, 30, 30, 10, 20, 6,000, 14,000 is your PAT. So our income statement is correct. Okay, our income statement is correct. Now what is the EPA? What is the number of equity shares? 10,000 rupees is the EPA, number of equity shares. Very good, pa. Can we all have a round of applause here? Or clap mattu kudupa. Hello. See, super. Okay, how super problem this is. Nothing is given in this question. Everything we are only fine. Okay, nothing is given in this question. Nothing directly given in this question. Everything is indirectly given. This is how. Okay, this is like a proper exam problem. Okay, but here proper application of mind is required. So it is like a simple problem only. But only thing is that practice irundha mattunda indha mari problem la nee solve pannalam. Without practice, you all will be stuck in this problem. Okay, va? So this is one leverage problem. Okay, this is one leverage problem. Now I want to give you one more leverage problem to you. Okay, I want to give you one more leverage problem to you. I want you to solve that. Okay, I want you to solve that here. So let me just search for that leverage problem. So this one we did, okay, this one we did. This leverage problem also we did. இங்கே இருக்கிற leverage problem is actually a similar problem that we already solved. Okay, this leverage problem is like a similar problem that we already solved. Okay, this is one leverage problem. If you see, you will get the answer. Okay, if you see, you will get the answer. So I want you to do RTP May 20. Yeah. So May 20 again, okay, again this problem is like a similar problem. Okay, calculate everything. So this is like a similar problem. Question number 4. Now there is no question that you have not seen. Okay, no question that you have not seen. Every question you will be seen for now. Okay, this is one more problem. It is a steady material problem actually. Okay, so this problem also we have, it is like a similar problem only. Steady material problem. This again a very easy problem. Sales given, PB ratio given, operating leverage given, financial leverage given. With all this information, you can actually find out everything. Okay, right? Proper income statement we can make, and using the concept of leverage, they're asking some questions. So this is again an easy problem. Every problem you have already seen. Only one problem I wanted to give you. That also you will be able to solve. Again, Navya, this is like a study material problem only. May 2022. Yes, 2 points I want to tell you, which this is 1 point and one more point I want to tell you. That's November level. Yes. Now everyone, see this problem, Debu Limited. Okay, see this problem, Debu Limited. Now let us solve this problem first. Okay, let us solve this problem first. And I want you to solve. Okay, yeah, there is only one point that I will tell you in the last, but I will tell you one. First one. Debu Limited currently has equity share capital of 1 crore 30 lakh. Okay, this is rupees 1 crore 30 lakhs consisting of 13 lakh equity shares. So 1 crore 13 lakh, which means 10 rupees per share. The company is going through a major expansion plan requiring to raise additional funds to the tune of 78 lakh rupees. So 78 lakh rupees தேவைப்படுது. Okay, to finance this expansion, management has the following plans. First plan, issue 7,80,000 equity shares of rupees 10 each. Second plan, 5,20,000 equity shares of rupees 10 each and balance through borrowings. So which means 52 lakhs from equity and meedi 62, 72, 78, right? So 26 lakh, meedi 26 lakh will be from this debt. Okay, so here it will be, okay, in this first case 78 lakhs equity. In the second case 52 lakhs equity and 62, 72, 26 lakh equity. In the third case 39 lakh equity and 39 lakh debentures. Okay, so 39 lakh equity, 39 lakh debentures. Okay, 39 lakh debentures. Equity, this is equity and 26 lakh debt. In the next case 39 lakh equity and 39 lakh preference shares. Okay, so 39 lakh equity and 39 lakh preference shares. Okay, so these are the 4 different cases. The EBIT is 52 lakhs per annum. So which means sales minus contribution you don't have to do. Sales minus variable cost is equal to contribution minus fixed cost is equal to EBIT. Directly start with EBIT. Okay, directly start with EBIT, which is 52 lakhs. So what you have to do here is that, okay, what you have to do here in this problem is, this is November 2022 problem, right? So this problem is actually a mix of leverages and capital structure decision, but okay, there is no difficulty here. So plan 1, plan 2, plan 3 and plan 4. 4 columns you keep you start with EBIT. Okay, so EBIT minus interest is equal to EBT. Okay, minus taxes is equal to PAT. But here preference dividend is also there. So PAT minus preference dividend. Okay, this is one point that I want to tell you. PAT is there. So PAT minus preference dividend will come, divided by earnings available to equity shareholders. Okay, I mean PAT minus preference dividend is nothing but earnings available to equity shareholders, divided by number of equity shares will become your EPS. Usually what you were doing, PAT divided by number of equity shares. If a preference dividend vanda, PAT minus preference dividend, that is what is earnings available to equity shareholders. If you divide your earnings available to equity shareholders by number of equity shares, you will get your EPS. Okay, you will get your EPS. Now, sir, how will I calculate number of equity shares? Number of equity shares is nothing but, okay, number of equity shares is nothing but, you can put a working note. Number of equity shares, existing shares, plus for this additional funds you want to raise additional, right? So additional shares, and additional shares pante, the total shares that you are getting, right? That is what is the number of shares outstanding. Okay, that is what is the number of shares outstanding. Are you all with me till now? Or thumbs up pudi. Yes sir. Format purida. Format purida. Give me a thumbs up. Super. Okay, now what you have to do, okay, what you have to do, fill this statement. Okay, fill this statement. So 78 lakh rupees, right? So 78 lakh rupees in your, okay, so 78 lakhs, 78 lakhs, 78 lakhs and 78 lakhs minus interest. So in the first case, how much interest is there? No interest. Okay, so first case, no interest. Second case, 26 lakh debt, and how much percentage interest? 12 percentage interest. So how much would be the interest? Adu minus panna. In the second case, 39 lakh debt into 9 percentage interest, correct? So aduketa interest podu. Next, no interest but preference shares is there. So preference dividend 6 percentage minus panna. Tax rate 40 percentage. Everything you calculate divided by number of equity shares. How to calculate number of equity shares? First, how much shares I'm having? 13 lakh shares I'm already having, right? So 13 lakh shares already having. 13 lakh, 13 lakh, 13 lakh and 13 lakh. Now additional how much shares I'm issuing? Here 7 lakh 80,000 shares I'm issuing. Here 5 lakh 20,000 shares I'm issuing. Okay, so 7 lakh 80,000, 7.8 lakhs. Now 5.2 lakhs and next is 3.9 lakhs and 3.9 lakhs. So 13 lakh plus 17.8, 20.80 lakhs. Here this will be 5.2, right? 13 plus 5.2 is equal to 18.2 lakhs. Here it is 16.9 lakhs and here it is 16.9 lakhs. So this is what is my number of equity shares. Okay, but 20.8, 20.8, 18.2 and 16.9, 16.9. Okay, 16.9 lakhs, 16.9 lakhs. Okay, so I want you to fill the statement and let me know what is the EPS for all the 4 cases. Are you all with me? This is what I want you to do. Okay, this is what I want you to do. After this, we will move into the next topic. Okay, after this, we'll move into the next topic. So now, sir, question template understood. Okay, this is what is the template. Now I will show you the question. Okay, I will show you the question. Calculate the EPS in all the files and calculate the financial leverage in all the cases. Financial leverage is nothing. Okay, financial leverage is nothing. So EPS kila just put financial leverage. Financial leverage is equal to EBIT divided by EBT. So do and calculate the financial leverage for all the 4 cases. Okay, you have to calculate the financial leverage for all the 4 cases. So first requirement EPS for all the 4 cases. Second requirement calculate the financial leverage for all the 4 cases. Are you all with me? Or thumbs up mattu podu. Yes sir, I am ready to do this problem. 10 mark problem, but this is. Okay, so now fill the statement. Okay, fill the statement. Just 5 minutes time, fill this statement. Okay, fine. Very good, very good. Okay, so I'm getting few answers. Okay, I'm getting the answers. Now let us fill the answers that I'm getting. Okay, let us fill the answers. Okay, let us start. Let me take the red pen. So you have filled all the details, correct? You have filled all the details. After filling all the details, you are getting 4 EPS. So I'm getting the EPS as 2.25, 2.47, 2.64, and 2.63. Okay, this is the EPS that I'm getting. Now, what is the financial leverage? 1.04, 1.047, okay, 1.047, 1.042, and this is 1. Okay. So this is what is the answer that I'm getting. Are you all with me till now? Yes, super. இப்போ நம்ம என்ன பண்ணலாம் ஓகேவா let us check the answers. Okay, let us check the answers. Keep your fingers crossed. Okay, keep your fingers crossed. Let us check the answers. Okay, so question number 4. Question number 4. Now if I go to question number 4, this is what is my question number 4. இது எல்லா டீடைல்ஸும் அவங்க போட்டிருக்காங்க to calculate the EPS. Okay, they are getting the EPS as என்னப்பா, then what is question number 4, right? Are you doing some mistakes? The EPS here it is 1.5, 1.61, 1.72 and 1.71. Okay, புரியல. EBIT is 78 lakhs. 52 போட்டிருக்காங்களா, ஒரே நிமிஷம். EBIT is 58 lakh தானப்பா. Sorry, EBIT is 52 lakh. Who said 78 lakh is EBIT? This is additional finance pa. Everyone did the same mistake. 78 lakh is the additional finance, which is the finance that you are raising. 78 lakh. What is the EBIT of the company? See, it is very clearly given. EBIT of the company is 52 lakhs. Everyone did the same mistake. Everyone. Oh, நான் 78 போட்டேனா? ஓகே ஓகே, இது நான் ஃபில் பண்ணிட்டேன். ஓகேவா? ஓகே. நோப்பா, mistake is not in my side. I may be wantingly doing the mistake. ஓகேவா? You should have pointed out. Maybe, okay, நான் வாண்டடா பண்ணிருப்பேன். mistake. Okay, 78 lakhs வரக்கூடாது, 52 lakhs வந்திருக்கணும். ஓகேவா? 52 lakhs வந்திருக்கணும். So my EBIT is actually 52 lakhs. Okay, this is what is my EBIT. 52 lakhs. EBIT is 52 lakhs. So now if my EBIT is 52 lakhs, again you have to do the EPS calculation. No worries, okay, no worries. Whitener hotel and cut pante. Now do the EPS calculation again. Do the EPS calculation and the financial leverage calculation again and tell me. No worries, but this is a practice because this is a capital structure decision problem. Idhe mari problems you are going to do in capital structure decision also. This concept is called as EBIT, EPS, NPS analysis. For now, okay, for now, trust with me, okay, trust me. Karate Kid movie paathirkiya? In that Karate Kid movie, Jackie Chan will say, okay, take this jacket, remove this jacket, okay, hang this jacket, again take this jacket, wear this jacket, and he will be pissed off. What, I am coming here to learn karate and you are making me do this thing. But end of the day, because he trusted his guru, he got the karate moves also. You all remember that scene? Hey, remember? Thumbs up for the sir, understanding. Adhe marida, if I am asking you to do something, Trust me and do that thing. Okay, by end of the day you will get your karate moves. Okay, now calculate the EPS again. Okay, I've been showing the question again. You calculate the EPS again. Take 2-3 more minutes. Okay, not an issue. This is what is the learning period. Okay, this is what is the learning period. Now this mistake you did, right? This mistake you will not do in the examination hall again. Understanding? This question in the examination, will you do this mistake again? You will not do this mistake again. So EBIT is 52 lakhs. Okay, so I'm getting answers. Okay, I'm getting answers. So let me fill. Okay, so 1.5. Okay, 1.613. That is the answer. Then 1. Okay, 72 and then 1.707. This is what is the answers that I'm getting. Then for financial leverage also I'm getting some answers. Okay, so financial leverage is 1, then 1.06, okay, 1.07, and then 1. Okay, 1.06, 1.07, and then 1. This is the answer that I'm getting. Are you all with me? Now let us, okay, keep our fingers crossed and check the answers. Okay, let us keep our fingers crossed and check the answers. Question number 4. Okay, 1.5 correct answer, 1.61 correct answer, 1.72 correct answer, 1.71 again a correct answer. Okay, again a correct answer. Now financial leverage 1 correct answer, 1.06 correct answer, 1.07 correct answer, 1 wrong answer. Okay, wow. You are getting a wrong answer. You are getting a wrong answer. So which means, so here 1 is a correct answer, 1.06 is the correct answer, 1.06 is the correct answer. Here instead of 1 the answer is 1.08. Now the question is why and how. Okay, the question is why and how. Inge da ore or point matter. Okay, this is the point that they are testing in the examination. So what is the point, sir? The point is that what is the financial leverage? The leverage that is happening because of the fixed cost of the company. Correct? Financial leverage, financial fixed cost of the company. The leverage which is happening because of the interest of the company. This is what is financial leverage. Adanala the formula is EBIT divided by EBT. Till this you know. But now answer my question. Is preference dividend also a fixed cost? Understand? Preference dividend is also a fixed cost. So if preference dividend is also a fixed cost, appadina preference dividend also affects my financial leverage. Point number 1. So this fourth answer was wrong because in the fourth case you are having a preference dividend. That is also a fixed cost. That is also a fixed cost. This is point number 1. Okay, point number 1. Point number 2. If fixed cost is there, appadina what is the formula, sir? EBIT divided by earnings available to equity shareholders, sir. And the question varala, sir, what is the formula? Okay, what is the formula? Now alaga gavani, financial leverage, okay, without preference dividend, you all know the formula EBIT divided by EBT, which is nothing but EBIT divided by EBIT minus the fixed cost, which is nothing but the interest. Okay, interest is the fixed cost. Now if preference dividend is coming, sir, which means financial leverage with preference dividend. So whenever preference dividend is coming into the question, your eyeball should come out pa. Yena angada twist. Okay, preference dividend one the twist. Sir, what is the twist? Here the formula is EBIT divided by EBIT minus fixed cost. But here I am having 2 fixed cost. But here I am having how much fixed cost? 2 fixed cost. So the formula is EBIT minus interest minus preference dividend. Till now, are you understanding? Summa or thumbs up kudu? Yes, sir. I am understanding. So preference dividend vanda interest minus pananum and preference dividend minus pananum. But again, here there is one more twist. This EBIT is a before tax number. This interest is a before tax number. But this preference dividend is an after tax number. Okay, va? Par in the preference dividend is coming after the taxes. Okay, va? In the interest is before the taxes. Then nadula taxes irukudala. So you have to remove the impact of taxes. This preference dividend you have to do 1 minus t. This after tax number we are converting into before tax number. So that is the reason I have to do preference dividend divided by 1 minus t. So this is what is the formula. Okay, va? EBIT minus interest minus preference dividend divided by 1 minus t. Sir, what is the logic? See, logic and all, we don't have much time, but you know, I already told you the logic. The logic is that preference dividend is a post-tax number. Everything is a pre-tax number. So convert post-tax number into pre-tax number. I am doing preference dividend divided by 1 minus t. Okay, but to have a proper comparison. So this is what is the formula for financial leverage. Actually, logically also I can prove this formula. Okay, but we don't have much time to logically very much go inside this entire topic. Otherwise, this is again a 15 minutes to half an hour topic. Okay, preference dividend and financial leverage. But for now, are you all with me the formula? Are you all with me with the formula? Super. Now tell me, what is the EBIT in the fourth case? 52 lakhs. What is the EBIT? 52 lakh. Interest was 0. What is preference dividend? Quick, what is preference dividend in the fourth case? So 2.34 lakhs divided by 1 minus, what is the tax rate? The tax rate is 40%. The tax rate is 40%. Okay, va? So now tell me, 52 lakhs divided by 52 lakh minus, what is 2.34 divided by 60%? What is 2.34 divided by 60%? 3.9 lakhs. Okay, so 3.9 lakhs. Upper 52 minus 3.9 lakh is 52 lakh divided by 52 minus 3.9, which is equal to 49.1 lakhs. Correct? Sorry, 48.1, right? $48.1 lakhs. Now what is 52 lakh divided by 48.1 lakh? What is 52 lakh divided by 48.1 lakh? 1.08 upon my financial leverage is equal to 1.08. Super. In the point mattu purinjada. This point till now they are not asked in the examination. Okay, va? In the preference dividend at a point using financial leverage, till now they have not asked in the examination, plus not even given in the study material. Okay, in the mari or problem is not even there in the study material, plus not even tested in the examination. Appo sir, is there a chance to test? Yes, if they have asked in the revision test paper, appadina they are assuming that you know this. Understanding? Yes. But till now, if this point is not tested in the examination, there is a chance at some examination, okay, at some examination, your examination in the mari or problem everyone will fall prey to this problem. Are you all with me? Appadina ipa note panni vechiko, okay, note panni vechiko. If preference dividend is there in financial leverage, the formula for financial leverage changes. Clarity? Or thumbs up kudu sir. Super new point we have learned. Or thumbs up kudu. Super. Okay, super. Now, shall we move ahead? Shall we move ahead? Okay. With this, the chapter leverages is completed. Okay, நம்ம left, right, center நம்ம leverages discuss பண்ணிருக்கோம். And with this chapter of leverages is completed. So leverage, sir, what is the bottom line? The bottom line is the leverage is an analysis. Okay, leverage is an analysis that we are doing for the financial statements, which means for the income statement. So you know total 6 formulas. One is general formula, one is percentage change formula, and one is if preference dividend is coming, what formula you should be using. Okay, what formula you should be using. Yellame I have discussed. Okay, yellame I have discussed. So operating leverage, financial leverage, combined leverage. Operating leverage is equal to contribution divided by EBIT. Financial leverage is equal to EBIT divided by EBT. Combined leverage is equal to contribution divided by EBT. So this is without preference dividend. If preference dividend is coming, contribution, sorry, operating leverage will not change. In operating leverage, there is no impact for a preference dividend, right? Interest preference dividend, no impact is there. Financial leverage, the formula will be EBIT divided by EBIT minus I minus preference dividend divided by 1 minus T. Combined leverage, again the formula will be contribution divided by, okay, contribution divided by EBIT minus I minus preference dividend divided by 1 minus T. Okay, here it operating leverage into financial leverage is equal to combined leverage. Okay, so operating leverage into EBIT cancelled. So contribution divided by EBIT minus I minus preference dividend. This is what is the formula for leverages. Okay, in the 6 for 6 leverages formula, and then the percentage change formula. Operating leverage is equal to percentage change in EBIT divided by percentage change in sales. Financial leverage is equal to percentage change in EPS divided by percentage change in EBIT, and combined leverage is equal to percentage change in EPS divided by percentage change in sales. Okay, so this is the formulas. Okay, these are the total formulas for leverages. Once you know these formulas and you know how to solve this problem and you know some special points, you will be able to. Okay, there is one more special point, margin of safety. That I already discussed. Correct? Operating leverage is equal to 1 divided by margin of safety percentage. Okay, margin of safety percentage. Okay, with this, the entire chapter of leverages is completed. There is nothing more than this that can be asked in leverages. Okay, so this is one. Okay, this is one. Super. Now, after this analysis, okay, after this analysis, a question is arising. Sir, you know how to calculate the leverage, but the question remains is, what is a good leverage, sir? Leverage அதிகமா இருந்தா நல்லதா இல்ல கம்மியா இருந்தா நல்லதா? More leverage is good or bad leverage is good? See, more leverage, you will get more advantage, but at the same time, there is a risk also. Less leverage, less risk is an advantage, but at the same time, you will not get more profit also. There is something called as ideal ratio. Okay, there is something called as ideal thing. Okay, so this ideal financing decision is something that we have to take. So, how much should be my ideal fixed cost and how much should be my ideal interest is the next question. Now, how much should be my ideal fixed cost is answered in costing. How much should be my ideal interest, which means how much should be my ideal loan. How much should be my ideal loan, which means what should be my optimum capital structure. So right now what we are discussing is that what is our optimum capital structure. So optimum capital structure. First of all, what is a capital structure? Different sources of finance will be there, right? In the liability side, different sources of finance will be there. How much equity, how much debt? That is what is optimum financial structure. Okay, that is what is optimum. This is what is optimum capital structure. Okay, that is what is optimum capital structure. Now, next one. How much should be my equity and how much should be my debt? Sir, what is the optimum capital structure? Should I take more debt? No, pa. More debt na, more leverage, more risk. Should I take less debt? Less debt na, less leverage, less risk. Ana, more return will not be there. There is something called as ideal. Sir, what is an ideal? Ideal na, we have two objectives, correct? Profit maximization, wealth maximization. So, the capital structure where my EPS is maximum, that is called as ideal capital structure. Okay, the capital structure where my EPS, what is my EPS? My profits, EPS is profits, earnings per share is maximum, that is the ideal capital structure. And the capital structure where my MPS is maximum, That is my ideal capital structure. Okay, so this is what is that. Okay, profit maximization, wealth maximization சொல்லிருக்கல. So this is established using EBIT, EPS and MPS analysis. Okay, EBIT, EPS and MPS analysis. So now we are entering into a new topic, EBIT, EPS and MPS analysis. Okay sir, what is this EBIT, EPS and MPS analysis? It is nothing but finding the EPS of the share starting from EBIT. So EBIT minus interest. Sir, why not starting from sales? In a sales to EBIT, story is covered in costing. Correct? Variable cost, fixed cost, admin cost, that cost, every costing is covered in costing. This after EBIT, all the decisions are taken care in financial management. So EBIT minus interest is earnings before tax. Minus tax is profit after tax. அதுக்கப்புறம் minus preference dividend. Minus preference dividend is equal to earnings available to equity shareholders divided by number of equity shares is equal to earnings per share. Sir, this is something that we have already seen, sir. This problem that you have seen, right? This is nothing but EBIT, EPS, MPS analysis. Okay, this is nothing but EBIT, EPS, MPS analysis. Sir, but this is a leverage problem. Here, if the question alone is changing, suppose if the question is asked, what is my ideal capital structure or what plan I should choose? அந்த மாதிரி ஒரு question கேட்டிருப்பாங்கன்னா, you have to choose a plan where your EPS is maximum. So where your EPS is maximum, plan 3. Okay, where your EPS is maximum, plan 3. So this plan 3 you have to choose. Okay, this plan 3 you have to choose. What is plan 3? Okay, you should be knowing what is plan 3. Okay, so this is the answer. Okay, but this is the answer. Plan 3. Plan 3 na enadhu? You have to take 16,90,000 equity shares and 39 lakh debentures. Okay, and 39 lakh debentures. So which means, sorry, 3,90,000 equity shares should be issued and 39 lakh debentures should be taken. This is the optimum capital structure. Sir, and the question or line mattum maatra, this is a capital structure decision problem only. Okay, now this EBIT, EPS, MPS analysis is nothing new. You already know. Okay, Anna, we have to be equipped with the calculations. Okay, and there are some few points also in the EBIT, EPS, MPS analysis that I'm going to discuss. First, a standard problem we will solve. Okay, first let us solve a standard problem. Sir, how to do an EBIT, EPS, MPS analysis problem? In this EBIT, EPS length, MPS I will teach you afterwards. Okay, how to calculate MPS. Let me teach you now only. What is P ratio? PE ratio is equal to MPS divided by EPS. What is MPS? EPS into P ratio. Appadina EPS lende if I multiply P ratio, I will get market price per share. If PE ratio information is given, then calculate MPS. If PE ratio information is not given, then stop the question with calculation of EPS. So this is what is EBIT, EPS and MPS analysis. Thumbs up pudupa. Okay, I'm just briefly touching the concept. Thumbs up pudu. Super. Okay, super. Okay sir. அப்ப இதுதானா சார்? ஆமா இதுதான். Preparing income statement for different financial plans is called as EBIT, EPS, MPS analysis. Okay, EBIT, EPS, MPS analysis. Super sir. Now let us do a standard problem for EBIT, EPS and MPS analysis. Sir, ஏதோ ஒரு problem கொடுங்க sir. Let me see. Okay, let me see. So இங்க என்ன கொடுத்திருக்காங்க? This is a வேற problem. Okay. இங்க என்ன கொடுத்திருக்காங்க? This is also MM approach. இங்க என்ன கொடுத்திருக்காங்க? This is again a different problem. I will go. Okay, actually you have started capital structure decision. Under capital structure decision, one of the topic is EBIT, EPS, MPS analysis. Okay, do this. okay, EBIT, EPS and NPS analysis la calculate the earnings per share. Okay, till this point you have to do. Okay, calculate the earnings per share. So this is the question. The management of RT Limited wants to raise its funds from market to meet housing financial demands. The company has various combinations of proposals to raise its funds. You are given the following proposals of the company. So they are having three proposals, P, Q and R, which means you have to do for P, you have to do for Q and you have to do for R. Okay, ba? Now, cost of debt is 12%, cost of preference shares is also 12%. So interest is also 12%, preference dividend are also 12%. Tax rate 40%. Equity shares, Alaga Gavani, inge the point. Equity shares of face value 10 will be issued at a premium of rupees 10. Premium of rupees 10, now the shares are issued at 10 plus 10. Premium of 10. So 10 rupees increase பண்ணிட்டு அவங்க issue பண்ணிட்டு இருக்காங்க. அப்படின்னா the shares is issued at 20 rupees னு அர்த்தம். Understanding? The shares is issued at 20 rupees. How much investment I want to raise? 8 crores is the investment that I want to raise. Okay, 8 crore rupees is the investment that I want to raise. 8 crores na 800 lakh rupees is the investment I want to raise. First option, total 800 lakh from equity. Second option, 800 lakh la 50%. Okay, va? So 400 lakhs in equity, 400 lakhs in debt. Third case, 400 lakhs in equity, 400 lakh in preference shares. This is what is the capital structure. Always EBIT will be given. Okay, inge alaga paru EBIT, earnings before interest and taxes, 3 crore 60. Okay, not 8 crore this time, no mistakes. So 360 lakh is the EBIT. Okay, 360 lakh is the EBIT. I am also filling properly. Okay, so 360 lakhs. Okay, now the above proposal, management wants to take their advice. Okay, management just wants to take my advice. So EBIT minus interest. Sir, interest எப்படி calculate பண்றது? This, okay va? So this means in the 400 into 12% is the interest. Okay, 400 into 12%. எவ்வளவு பா? 36 lakh rupees is the interest. Correct? Here 36 lakh rupees is my interest. Like this. Okay, like this you have to do. அதே மாதிரி இங்க preference dividend is 36 lakhs. Okay, இங்க preference dividend is 36 lakhs. Now, number of shares calculate பண்றது. Existing how many shares I'm having, அந்த மாதிரி ஒரு டீடைலோ கொடுக்கல. So these are the total shares. So 800 lakhs divided by 20 is my number of equity shares. Understanding? In this case, 800 lakhs divided by 20 rupees. 800 divided by 20, what is the amount? 800 divided by 10 is 80 lakhs. Okay, divided by 2 is 40 lakhs. So 40 lakh equity shares. And here in these two cases, 20 lakh equity shares. Are you all with me? Appi calculate பண்ணிட்டு you have to tell me what is the EPS. Understood the question? Okay, va? In the EBIT, EPS, MPS analysis, not worth for me to do this. Okay, va? I want you to do. Clarity இருக்கா? Yes, give me a thumbs up. Yes, I'm going to do this problem, sir. அதுக்கு அப்புறம் நான் இந்த next point discuss பண்ணுவேன். Okay, that is the next concept. Give me a thumbs up. நம்ம one by one new pointல போடலாம். Okay, new pointக்கு நம்ம போடலாம். Now calculate the EPS for these three proposals. Okay, calculate the EPS for these three proposals. Quick up, and this is a very easy problem. Super. Now I got the answers. The answers are 5.4, 9.36 and 8.4. Okay, so let me make a note. Okay, let me make a note. My EPS, correct? I got my EPS for three cases. For the first case it is 5.4, 9.36 and 8.4. Okay, and 8.4. So these are the three cases. Okay, these are the three cases, which means these are the three EPS. But the answer should be also a comment, because the EPS is maximum in plan 2. Therefore, it is advisable to finance in plan 2. Okay, but this is what is the answer. From the following proposal, the management wants to take advice. Okay, advice after computing the following. So compute பண்ணிட்டு advice வேற கொடுக்கணும், correct? So your advice should be that it is recommended to go for plan Q, okay, proposal Q, which is 50% equity and 50% debt. Okay, 50% equity and 50% debt. Are you having clarity? So let us check the answer, sir. First, question number 3. So question number 3, 5.4, very good. 9.36, super. 8.4, super. Okay, clap on everyone. Clap emoji for super. See, I'm making you equipped to solve all the problems. Happy, pa. I'm not seeing any happy faces. Yes, yes. Now I'm receiving the claps. Okay. I want to see all the happy faces. Okay, now this is okay. Okay. So now you are getting the answers. Okay, now you got the answers. My voice is audible, right? Is there any breakage? Okay, just one moment. Okay, one moment. Okay, now let me know if my voice is clear, loud, audible. Super. Now, okay, now let us move ahead. So this one is over, sir. Okay, this one is over. How to find out my EBIT, EPS and MPS analysis? Okay, EBIT, EPS and MPS analysis. So MPS analysis is another. If in the question PE ratio is given, okay, if in the question PE ratio is given, what you have to do? You have to multiply the PE ratio with EPS to calculate the market price per share. Then analysis has to be made with market price per share. Okay, this is point number 1. Point number 2, sir, PE ratio is not given in the question, sir. Okay, PE ratio is not given in the question. Instead, KE is given in this question. Okay, PE ratio is not given in the question. Instead, KE for all the 3 cases is given. So, PE ratio is nothing but 1 divided by KE. How, sir? Because the formula for KE is equal to EPS divided by MPS. The formula for PE ratio is equal to MPS divided by EPS. So PE and KE are inversely related to each other. Something similar to operating leverage and margin of safety, right? அதே மாதிரி தான் KE and PE ratio. Sir, KE பத்தி ஏதாவது சொல்லுங்க sir. When I will go to the cost of capital chapter, I will tell more about KE. But for now, you understand, if PE ratio is given, calculate PE ratio. If you multiply PE ratio. If KE is given, calculate PE ratio, which is nothing but 1 divided by KE. Which means, if KE is 10%, PE ratio is 1 divided by 10% at 10 times. If KE is 5%, P ratio is 1 divided by 5%, which is 20 times. Okay, that is how you have to calculate, and then you have to calculate the market price per share. Till now, clarity irka? See, I'm giving you some points. Okay, some points which will be used in the problems. See, this EBIT, EPS, MPS analysis, exam perspective la pathana, okay, well, little less weightage is there. So, lot of problems we will not be doing, okay, but I will give you homeworks. Okay, I will give you homework to have a complete coverage, and I will discuss lot of points, okay, in EBIT, EPS, MPS analysis. So next point, which I have to choose now? 9.36, option number 2 I have to choose. Okay, option number 2 I have to choose. Now ipo alaga gavani, sir, in every case this EBIT will be given. Yes, EBIT will be given. Without EBIT we cannot start the question. So EBIT will be given. In lot of cases EBIT வந்து இன்டைரக்டா கொடுத்துருவாங்க. ஓகே, EBIT இன்டைரக்டா கொடுத்துருவாங்க. சப்போஸ் அவங்க என்ன கொடுப்பாங்கன்னா, currently the EBIT is this much, after additional financing they are earning this much more. So EBIT should be whatever they are earning and whatever now more they are earning, அது ரெண்டும் plus பண்ணும். So that is what is EBIT. Point number 1. Point number 2, sometimes what they will tell is that Previously this was the capital and this is the EBIT. Now this is they want to raise additional existing EBIT. Next EBIT கொடுக்கவே மாட்டாங்க. So நீ என்ன பண்ணணும், ROI calculate பண்ணிட்டு அது which means proportionate பண்ணணும். For example, I am already having some 100 lakh rupees of capital. அதுல my EBIT is 10 lakh rupees. I want to raise additional 50 lakh rupees. I want to raise additional 50 lakh rupees. Then what should be my EBIT? So 100 lakh 10 rupees na additional panna 150 aidum. So 150 lakhs evlo 15 lakh rupees. So 15 lakh rupees should be my EBIT. Okay, but likewise you have to solve. Adamari or indirect. I will also tell you which question it will come. Anna, I am just telling you the points now. So whenever these points come into the examination, you should be remembering that yes, this point was already discussed. Okay, now for a given EBIT, okay, for a given EBIT, if at all I want to find out the EPS, that is called as EBIT EPS analysis. Okay, for a given EBIT. Sir, what if my EBIT is less? What if my EBIT is more? Will my answer change? Yeah, right now I am telling proposal number Q. This proposal number Q is established only when my EBIT is 360 lakhs. So if my EBIT is increasing from 360 lakhs or if my EBIT is decreasing from 360 lakhs, will my answer change? The answer is yes, your answer is change. Appa sir, which one should I choose? Na test pannikitte irukanuma, 300 lakhs which option, 250 lakhs which option, 100 lakhs which option, maybe 100 lakhs P, more than 100 lakhs to 360 lakhs Q, more than 360 lakhs R, and mari irkalamla. So now if you can tell me what is the number, okay, if you can tell me what is the number at which, alaga gavani, you can tell me what is the EBIT number at which both the EPS is same. You tell me the EBIT number at which both the EPS is same. Apina, before that EBIT, this I will choose. After that EBIT, this I will choose. Will that be additional element? Will that be enough for me to take the decision? Yes. So this is called as indifference point. Okay, this is called as indifference point. I will explain you once again also if you have not understood. Okay, this is called as indifference point. Sir, what is the indifference point? Indifference point is the EBIT level. Okay, indifference point is the EBIT level where the EPS is same. Okay, indifference point is the EBIT level where the EPS is same for alternatives. I mean for both financial alternatives. Okay, for both financing alternatives. Sir, what are you trying to tell, sir? See, what I am trying to tell is that this is the EBIT. This is the EPS for plan A. And this is the EPS for plan B. This is the EBIT. At 10 lakh EBIT, say my EPS is 1 here and my EPS is 2. Okay, which decision you will take? I'm just asking you which decision you will take. A or B? A or B? Answer me, A or B? B, correct? You will take B. Okay, you will take B. Now, when I'm increasing my EBIT to 20 lakh rupees, definitely profit is increasing, EPS is also increasing. This is becoming 2 and this is becoming 3. Okay, but this is becoming 2. So, which means it double agadu. If my EBIT is doubling, my EPS is also doubling. So which means my financial leverage work out agadu. Are you understanding, right? So 100% change in EBIT, it is having 100% change in EPS, or maybe let me put 2.2 and here it is 3. Okay, here it is 3. Now which decision I will choose, A or B? B pa. B. Wherever EPS is maximum, that only I will choose, right? If I'm increasing to 30 lakh rupees, this is becoming 3.4. Okay, this is becoming 3.4 and this is also 3.4. Okay, yeah, na, it slowly increase agade, it faster increase agade. Now which one you will choose? You can choose either A or either B, correct? You will choose either A or B? ஏன்னா EPS is same. Now when I'm increasing to 40 lakh, இது speed increase ஆகுது, ஓகேவா? 4.5. Ana this is becoming say only 4. Now which one you will choose, A or B? A. Are you understanding? Sir, which means what are you trying to tell, sir? What I'm trying to tell is that if I want to choose which financing decision I want, for a given EBIT level, I can calculate which is EBIT, EPS, MPS analysis. If I know this number, if I know this number 30 lakhs, so 30 lakhs is the number where EPS is same. So if I know this number 30 lakhs, I would have known the answer. Any EBIT before 30 lakhs, correct? Any EBIT before 30 lakhs, choose B. Any EBIT after 30 lakh, choose A. Correct? So this is my proper decision making. So now I don't even have to worry about the profit number. So which means any profit number enakku therinja, I will know what is the financing decision. So this 30 lakh is what I call it as indifference point, because at indifference point the EPS for both the financial alternative is same. Are you all having clarity? Okay, I'm just brushing up the concept for indifference point. Thumbs up kudu. Yes, if you're having a clarity, or thumbs up kudu. Super. Okay, super. Now, okay, sir. Okay, now I'm understanding this. Okay, I'm understanding this, sir. I'm understanding this. But why it is moving like this, sir? Which means இது 100% increase ஆகும்போது இது மேபி 1ல இருந்து 2.2, 1ல இருந்து 2.2 இது 120% increase ஆகுது. இது 2ல இருந்து 3 ஆகுதுன்னா மேபி it is increasing by some percentage. Okay, it is increasing by some percentage. Why it is happening like that, sir? அப்படின்னு ஒரு கேள்வி வரும்போது it is happening because of the financial leverage. Correct? If the financial leverage for EPS A is more, EPS A will run faster. If the financial leverage for EPS B is, when plan B is less, it will be running slower. Okay, so if one is already ahead, one is back. So the faster one at some point in time he will be equal. So at 30 lakh point both are equal. So 30 lakh is the indifference point. Afterwards A will win. Okay, afterwards always A will win. Correct? Which means after 30 lakhs always A will win. So this is what is the indifference point. Sir, what is the meaning of indifference point, sir? Indifference point is the EBIT level. Indifference point is the EBIT level at which EPS is same. Sir, what is the formula for EPS, sir? What is the formula for EPS? EBIT minus interest is equal to earnings before tax. Earnings before tax minus tax is equal to profit after tax. Profit after tax minus preference dividend is equal to earnings available to equity shareholders. Earnings available to equity shareholders divided by number of equity shares is equal to EPS. Hey, nothing great I'm talking about, okay, va? My words are not alien to you. Okay, you all are understanding. Process பண்ண முடியுதா நான் EPS க்கு என்ன சொன்னேன்? Which means EBIT minus interest. Okay, interest in alternative 1 into 1 minus T panna, I am getting profit before after taxes. Okay, EBIT minus I1 is equal to earnings before taxes. Okay, EBIT minus interest is equal to earnings before taxes. 1 minus T panna, earnings after taxes minus preference dividend in alternative 1 divided by number of equity shares in equal 1. Okay, number of equity shares in alternative 1. So this is nothing but, okay, this is nothing but EPS for alternative 1. I want the EBIT level where the EPS is same. So அதனால என்ன பண்றேன், ஒரு equal to போடுறேன். ஓகேவா, என்ன பண்றேன், ஒரு equal to போடுறேன். Equal to, okay, equal to EBIT minus interest in alternative 2 into 1 minus T minus preference dividend in alternative 2 divided by number of equity shares in alternative 2. So if you put all these values, EBIT alone is unknown. So if you solve for EBIT, that EBIT is called as indifference point. Clarity irukka? That EBIT is called as indifference point. Are you all understanding? This is a tough formula va? Are you all understanding this formula? Thumbs up mattu kodu. Yes sir, I am understanding. Or thumbs up kodu. Or you want me to repeat again? Super comfortable. Okay, now sir, இப்போ indifference point ரெண்டு financing decision தான் கிடைக்கலாம். இங்க மூணு financing decision இருக்குது sir. So first find out indifference point for PQ, then find out for QR, then find out for PR. அந்த மாதிரி தான் we have to solve. Now indifference point for P and Q. Okay, indifference point for P and Q. Okay, now what is the formula for indifference point? So indifference point is equal to EBIT minus what is the interest in proposal P? You tell me. You tell me, pa, what is the interest in proposal P? 0 into 1 minus T. How much is the tax rate? 40, yeah? 40, right? 40 percentage, 40 dhanapa. Yeah, 40 percentage. Now, is there any preference dividend? No preference dividend than P, right? So, minus 0. Pannale onno prayojanam illa. Divided by how many equity shares in P? How many equity shares in P? 40 lakhs is equal to EBIT minus what is the interest in proposal Q? 48 lakhs. Okay. Into 1 minus 40 percentage divided by how many equity shares in indifferent, alternative P? 20 lakhs. Okay, but 20 lakhs. Now if you solve this, okay, but now if you solve this, you will get the EBIT. Sir, how to solve this? Idana cancel pannama. In the 20 lakhs அப்படியே cancel பண்ணிட்டு 2 பண்ணனா இந்த 2 அப்படியே அந்த பக்கம் வந்துரும் கரெக்ட்டா. So EBIT minus 0 is 0. So EBIT into 1 minus 40 percentage is 60 percentage. So EBIT into 60 percentage is equal to 0.6 EBIT is equal to okay va. So 1 minus 40 percentage is 60 percentage. 60 percentage அப்படியே 2 okay va. So 60 percentage into 2 na panna it will be okay va. 60 percentage is 0.6. What is 0.6 into 2? 1.2 okay va. So now 1.2 is multiplied inside. So 1.2 EBIT minus what is 48 lakh into 1.2? Quick as well, 48 lakh into 1.2. 57.60 lakhs. Okay va. Na correct ah pandrena. Correct ah pandren. Now this 57.60 lakh will come this side. Okay va. So which means 1.2. So which means what is 1.2 minus 0.6? 1.2 minus 0.6 is 0.6. So EBIT is equal to 57.60 lakh divided by 0.6. So what is 57.60 lakhs divided by 0.6? 96 lakhs. Appadina the indifference point for P and Q is equal to 96 lakh. Ipa alaga gavani, wherever the fixed cost is less, very important point, wherever the fixed cost is less, that alternative before indifference point. Wherever the fixed cost is more, that alternative after break even point. So first less than 96 lakh, equal to 96 lakh and more than 96 lakh. Sir, inge P or Q, where the fixed cost is low. So if you see in P, fixed cost itself is 0, correct? So adanale less than 96 lakh P equal to 96 lakh P or Q, more than 96 lakh Q. Inge confusion irukko sir. எது P போடணும் எது Q போடணும் சார் ஓகேவா. less than 96 என்னது, more than 96 என்னது. So here the point is wherever the fixed cost is less, that alternative before indifference point. Wherever the fixed cost is more, that alternative should be after indifference point. So this is what is the concept and this is what is indifference point. So if I'm finding for P and Q, so this is what is the answer. Check பண்ணலாமா 96 lakh நம்ம கரெக்ட்டா வருதா இல்லையா. Now see, indifference point for P and Q is 96 lakhs. Okay, indifference point for P and Q is 96 lakhs. Now let us also calculate. Okay, let us also calculate indifference for P and R. So adhe mari if you calculate for P and R, you will get 1 crore 60 lakhs. Okay, for PQ you got now PR 1 crore 60 lakh, and if you do for Q and R, you inge par here also 20 lakh shares, here also 20 lakh shares. If both are getting cancelled, appadina no indifference point. So denominator same இருந்தா you cannot find out indifference point. So அதனால you have to put no indifference point. Sir, how sir? Solve பண்ணி பாரு. You will not get EBIT. Okay, you will not get EBIT at all. Because everything is same. Everything is the constant is same. So அதனால you cannot find out the EBIT. So there is no indifference point. So likewise you have to solve the problem. Okay, so this is what is one indifference point problem. Are you all with me? Now I will give you one problem for practice also. But till now, are you all with me? ஒரு thumbs up kodu. Yes sir, ஒரு thumbs up. Super. Super. Now this indifference point problem is completed. Now I will give you one indifference point problem. Okay va? Exam problem solve பண்ணலாமா? Okay va? Let us solve an exam problem. Page number 225 ல இருந்து பார்க்கலாமா? In the EBIT, EPS, yeah, one more point. Okay, one more point. Okay, one more point. Capital structure decision is one chapter. Okay, wow. This capital structure decision I am bifurcating into two. One I call it as capital structure planning. One I call it as capital structure theories. Under capital structure planning, three concepts are there. EBIT, EPS and MPS analysis. Second concept, indifference point. Third concept, financial break-even point. And under capital structure theories, we are having net income approach. We are having net operating income approach. We are having EMM approach. Okay, va? Likewise, we are having the concept. Okay, we are having some concept. And likewise, we are also having arbitrage concept. Okay, we are also having arbitrage concept. Okay, so this is what. Okay, this is what is this. So capital structure planning, capital structure decisions and arbitrage concept. So this is what is in capital structure theories. So capital structure decision chapter la I am dividing into two. One is planning, which is nothing called as analysis. ஏன்னா my main focus is more on analysis. இது வந்து theories. Theories na taking decisions, right? So this I am going to discuss afterwards. So first we are completing the analysis part. So EBIT, EPS, MPS analysis is completed. Indifference point is completed. Third one, financial break-even point. Sir, what is financial break-even point, sir? First of all, what is break-even? So costing la nee padichirpa. Break-even means the sales level at which my profit is zero. அதே மாதிரி in financial break-even point, the operating income level where my EBIT level where my EPS is zero. Correct? My EBIT level where my EPS is zero. EBIT level where my EPS is zero. So what is financial break-even point? Financial break-even point is equal to my EBIT level where my EPS is zero. Okay, ba? Sir, indifference point is the EBIT level where my EPS was same. Financial break-even point is the EBIT level where my EPS is zero. So financial break-even point can be found out for all the different alternatives. Sir, when will my EPS will be zero? If I am earning zero profit, illa. If I am earning zero profit, EPS will be loss because I am having fixed cost also. Understanding? See, EBIT minus interest. Okay, EBIT minus interest. This is called as earnings before tax. Minus tax, it is called as profit after tax. Divided by number of equity shares, it is called as EPS. Now, if my EBIT is zero, suppose my interest is 10 lakhs. If my EBIT is zero, my EBT will be minus 10 lakhs. Tax 50%, PAT will be minus 5 lakhs. My EPS will be negative. I want my EPS to be zero. When will my EPS will be zero? If I want my EPS to be zero, I also want my PAT to be zero. And PAT zero irundada EPS zero. If I want my PAT to be zero, I also want my EBT to be zero. And EBT zero irunda mattum PAT zero iruko. If I want my EBT to be zero, my EBIT should be equal to interest. And EBIT 10 lakhs irunda mattum da EPS will be zero. Appo what is break even point, sir? Break even point is equal to interest. Understanding? Okay, sir. What is financial break-even point? Financial break-even point is nothing but fixed cost. Fixed cost is a financial break-even point. Okay, fixed cost is a financial break-even point. Sir, preference dividend irunda ennadu? It is also a fixed cost. So financial break-even point is equal to interest plus preference dividend. Okay, interest plus preference dividend. And again the same concept, preference dividend is after tax, so divided by 1 minus t. So this is what is the formula for financial break-even point, and this is the EBIT level at which the EPS will be zero. Clarity irka? So now you know how to calculate EPS, you know how to calculate indifference point, you know how to calculate financial break-even point. Let me give you one consolidated problem where they're asking all the three. Are you all ready? Just give me a thumbs up. Yes sir. ஒரு thumbs up போடு. ரெடியா? அந்த மாதிரி ஒரு ப்ராப்ளம் போடலாம். ஓகேவா? So May 2018 இதுல கேட்கல. Question number 2 not asked. Question number 4 is also not. Okay, inge கேட்கல. So here no EBIT EPS. So here no capital structure planning is asked. Next one. Yeah, this is an EBIT EPS problem pa. Okay, this is the EBIT EPS problem. But here you know financial break-even point la kekala. Okay, but this is a EBIT EPS problem. But here because which financing I have to choose, wherever my EPS is maximum, inga kuduthiranga maximizing the earnings. Okay, but here that is not used. Okay, that financial break-even. So for now I just want to do one problem for indifference point, financial break-even point, then we will come to this problem. Okay, so only one problem will be asked. Idhukku mele kekka mattaanga. Now let us go to the next question paper. May 2019. So this is cost of capital. This is dividend decisions. This is capital structure decisions. Here you have to calculate the earnings per share. So this is again EBIT EPS analysis. See, 10 marks problem. Okay, wow. 10 marks problem. Nothing. Just have to calculate the EPS, and wherever the EPS is maximum, that is the best capital structure. Okay, wow. This problem we don't have to do. Yana romba simple. Okay, wow. Equity financing, you just have to calculate the EPS. Okay, you just have to calculate EPS for 4 different plans. Plan 1, plan 2, plan 3. Oh, 3 plans. Ana 3 plans ke 1, 2, 3, 4, 5 EBIT level is given. So plan 1 5 EBIT level, plan 2 5 EBIT level, plan 3 5 EBIT level. So 15 EPS you have to calculate. Understanding? 5 into 3, 15 EPS you have to calculate in the question. Correct? Yeah, I already told you 1 EBIT. Here for 5 EBIT you have to calculate. Okay, for 5 different EBIT you have to calculate. So 15 EBIT. So 15 EPS. So 5 EPS here, 5 EPS here, and then 5 EPS here. Okay, very interesting problem this was, but 5 EPS, and then you have to give the comment. Okay, you have to give the comment. So this problem EBIT EPS analysis, 10 mark problem pa. Patiya, nothing great is there. Okay, let me do one more problem. Let me check. Yes. See, we have to take 2 assumptions. Okay, va? One assumption is that loss carry forward ஆயிடும். So carry forward ஆகும்போது நெகட்டிவ்ல 0 போட்டுருவாங்க. Now if you see here it is negative. So அவங்க என்ன பண்ணிருக்காங்கன்னா they can set off the losses பண்ணிட்டு tax positive ல போட்டுருக்காங்க. Tax should be negative, right? இவங்க tax positive ல போட்டுருக்காங்க. See 40 minus 20 is 20. 80 minus 40 is 40. 1,60,000 minus 80 is 80. And minus 20 plus 10 is negative 10. So if your EBT is negative, tax is positive, saying that in the loss where எங்கயோ set off பண்ணிட்டு advantage எடுக்கறாங்க. Correct? So loss is an advantage here. So this is one. Okay, this is one. So this is one assumption that they are taking. The company can set off the loss against the business profit or may carry forward into next financial years. So அந்த மாதிரி ஒரு assumption எடுக்கணும். ஏன் இந்த மாதிரி assumption எடுக்கறாங்க சார்? ஏனா Yeah, they would have given they would have given this line. Okay, so this is one assumption that they are taken, assuming that this is not the only business. They're having lot of other business also. அந்த மாதிரி தான். Okay, considering a new plant. So அந்த மாதிரில சில சில pointsல எடுத்துட்டு you should be knowing that this is not the only business. They're also having other business. So because of this loss can be settled off to other losses, other profits. And here you are putting 10,000 positive, there it will be 10,000 negative. Okay, so this is what is the assumption. Understanding? Okay, nothing great is that EPS is making negative. That is what is the point.
You have to show it negative point.
You have to show it negative. Okay, done. Now where enough a question. See this EBIT, EPS, MPS analysis. What I will do is that I will give you some homework. Hey, yesterday's homework you did, huh? This is working capital management, investment decisions, cost of capital, theory question, ratio, investment decision, dividend decision, investment decision, working capital management, capital structure. Super. All the 3 points. This question alone, see. Question number 3. This is question number 3. Similar problem that you solved. Equity 100, equity debt 50-50, and equity preference share 50-50. Total investment is 4 lakh rupees. Ange edo crores la irundhu, inge edo 4 lakh la irukudhu. So this also we will not solve. Anna, because here 3 things are asked. Okay, 3 things are asked. Expected EBIT is 1 lakh at a premium of 10 rupees per share. It's ditto problem. But the only one thing is that they are asking EPS, they are asking indifference point also, and they're asking the financial break-even point also. Okay, they're asking the financial break-even point also. So you want to solve this problem because this is like a same problem. You want to solve this problem, question number 3. Correct. It is like a same problem. Numbers alone is changed. What is one extra point? The extra point is that you have to calculate the financial break-even point. First one, I will just show you how to solve this problem. EBIT minus interest is equal to EBT minus taxes is equal to PAT minus preference dividend is equal to earnings available to equity shareholders divided by number of equity shares is equal to EPS. Okay, divided by number of equity shares, 4 lakh, 2 lakh, 2 lakh divided by 20. Okay, because 10 rupees premium we are issuing, right? So 2.5, 4 and 3. So here 4 is maximum. Next, what is financial break-even point? Interest plus preference dividend divided by 1 minus T. So Excel, no interest, no preference dividend, so financial break-even point is 0. While interest plus preference dividend, no preference dividend, so here 20k is the financial break-even point. Next one, interest, no interest, preference dividend 20, so 20,000 divided by 50% is equal to 40,000, so 40,000 is the financial break-even point. Inge par now 0, 20,000, 40,000. So this is what is financial break-even point. Okay, but nothing great. Okay, nothing great. This is what is financial break-even point. Indifference point. Okay, but for X and Y 40,000, for some X and Z 80,000, and for Y and Z it is 20,000. Okay, so this is what is this. Okay, this is what is this. Analysis mattu potuko. Before that this and after that this. And mari or analysis mattu potuko, which is nothing but the range for EBIT. So if you give that, this problem can be solved. Okay, if you give that, this problem can be solved. See, a 10-mark problem in capital structure decision. A 10-mark problem in capital structure decision. So this is one problem that I wanted to solve. Sir, idhula enna sir new points irukkalam? Let me tell you some new points that are possible. First point, alaga gavani. First point, under EBIT, EPS, if MPS is asked, you can do EPS into PE ratio, or if K is given, you can do EPS into P ratio is nothing but 1 divided by K. Okay, so this alone you can do. if you want to calculate MPS. So this is EBIT, EPS, MPS analysis, point number 1. Point number 2, if EBIT is not given, whatever was the previous EBIT, adhukku proportionate EBIT you have to take. Okay, what if EBIT is not given? The new EBIT will be proportionate EBIT. Okay, well, proportionate EBIT. I will show you one question also. Now, third case. In some cases, interest will be given as slab rates. Okay, in some cases, interest will be given as slab rates. Slab rates is up to 10 lakh, 10 percentage. 10 lakh to 20 lakh, 12 percentage. More than 20 lakh, 14 percentage. And the slab rate poduvanga. And suppose 3 cases are there. In the first case, 8 lakh rupees is the interest. Sorry, 8 lakh rupees is the debt. Up 8 lakh into 10 percentage. In the second case, 15 lakh rupees is the debt. Up to 10 lakh, 10 percentage, right? So 10 lakh into 10 percentage plus remaining 5 lakh into 12 percentage. That is what is the interest. So interest or working note. Understanding in the point, understand mudida. In some questions, interest will be given as slab rate. Okay, in some questions, interest will be given as a slab rate. That, yes, sir. Aprina, up to 10 lakh, 10 percentage. Suppose 15 lakh rupees interest na 10 lakh 10 percentage, 5 lakh 12 percentage. Sir, 30 lakh debt kuduthirupanga 10 lakh 10 percentage. Nadula irukra 10 lakh 12 percentage, 20 lakh adaicha. Then one more 5 lakh 14 percentage. Okay, so 25 lakh na one more 5 lakh 14 percentage. This is how you have to calculate. Okay, interest can be given as a slab rate. Second, interest can be given as a condition. Enna mari condition? Avanga solluvanga, okay va? If the debt equity ratio is less than 35 percentage, interest rate is 10 percentage. If the debt equity ratio is more than 35 percentage, interest rate is 12 percentage. Correct? Interest can also be given as a slab rate. Interest can also be given as a condition. See, interest directly given, you know. And interest twist pannonu, interest can also be given as a slab rate. Interest can also be given as a condition. Slab rate na you know how to calculate. Condition na enna pannu, debt equity ratio calculate pannu. What is debt equity ratio? Total debt divided by equity shareholder funds. Okay va? Total debt divided by equity shareholder funds. Adala preference add pannalam. Sorry, preference add panna kudadu. Okay va? Equity shareholder funds, debt divided by equity share capital plus reserves and surplus. Okay va? Sometimes retained earnings will also be given. That information you have to use to calculate the debt equity ratio. Clarity irka inga variko? Sir, appadina in financial plan A, maybe the debt is less, so interest will be 10 percentage. In financial plan B, maybe the debt is more, so the interest you have to use is 12 percentage. Okay va? So enge 10 use pannu, enge 12 use pannu. That is what is the question. Clarity irka? Third point, interest. Thumbs up kudu sir. Clarity irukadana or thumbs up kudu. Yes sir. Super. Okay, super. So this is one point. Okay, this is one point. Next என்ன sir point இருக்கலாம்? Existingly they are having some interest. Additional they will have to issue. Okay, so interest is nothing but existing interest. Adala you already know. How you do for equity shares? Existing plus additional. அதே மாதிரி interestல existing and additional இருக்குது வாய்ப்பு இருக்குது. ஏன்னா existingly they are having some debentures. Additionally they are issuing some new shares. So existing debentures existing interest. Additional debentures additional interest. That will be your total interest. So EBIT, total EBIT minus total interest is equal to EBT minus taxes is equal to PAT minus preference dividend is equal to earnings available to equity shareholders divided by total number of equity shares is equal to EPS. So this is what is EBIT and EPS analysis. Okay, so existing plus additional. Okay, so interest is nothing but existing plus additional. And mari kuda irkalam. Okay, and mari kuda irkalam. So this is what, okay, this is what is the special points that can be coming in, special points that can be coming in EBIT, EPS, MPS analysis. Idhukku mele there is no special point. Idhukku mele no questions can be asked. Okay, idhukku mele no questions can be asked. Are you all with me? Super. Now, I am going to give you some homeworks. Okay, wow. Actually, for capital structure decision, Textbook is a good source, okay? And a textbook is a good source. Textbook like good questions are asked. Just let me open. Okay, just let me open. Capital structure decisions. Okay, well, just 1 minute. You open your textbook. Open your textbook. Capital structure decision chapter 8. Chapter number 5. Okay, capital structure decisions. Have you taken? Super. Now in this, okay, in this chapter, okay, what just now in capital structure decision, I will give you 3 problems as homework. Okay, so after tomorrow's class, we are going to start a new chapter. Okay, in a capital structure planning alone, we are completing now. I am going to give you 3 problems as homework. In the 3 problem நீ பண்ணிட்டு வந்தா, you will be getting a good hold in capital structure. Okay, va? ஏன்னா exam worthy questions are asked in study material. So now capital structure 3 problems I want to give you as homework. Okay. Now illustration number 11 is actually very easy, so don't do this problem. Okay, this is actually a very easy problem. In equity debt financing, what is the EPS? Okay, what is the EPS? This is a very easy problem. Don't do this problem. This is again an easy problem, but I want you to do this problem. Okay, this is the first question I want to give you as homework. Illustration number 12. Note panniko, illustration number 12. This is the first homework problem. Okay, best of luck limited. Do this problem. Okay, but do this problem. If I'm telling you to do, trust me and do this problem. Okay, illustration only 3 problems. I'm not giving you more. 3 problems I'm giving you as homework. Illustration number 12. Again, it is a very simple problem. Okay, illustration number 12. Illustration number 13. Second problem. Here interest is in slab rates. Okay, here in this question interest is in slab rates. Okay, va? And the adjustment the interest is in slab rate. Shaji steel. This is one problem that you have to do. Illustration number 13. And third is this problem. Inge interest is in condition. Okay, va? Inge interest is in condition. Okay, va? So this problem and EBIT is also not given. Okay, EBIT is also not given. So in the problem you have to do. Okay, but these 3 problems you have to do. Illustration 12, 13 and 14. Or a thumbs up kudu. Yes sir, I'm going to do this problem. Okay. So these are the 3 problems I would want you to do. Okay, but these are the 3 problems I would want you to do. Sir, practice problems la ஒரே நிமிஷம் practice problems மட்டும் பார்த்துக்கலாம். See, very easy problem. Again, this is again a very easy problem. Find out the indifference point. Okay. Whatever indifference point problem. This problem we already did. Okay. This problem we already did. Exam problem. Okay, va? And this problem, okay, and this 11th problem, okay, va? fourth problem. Why I'm asking you is that this is a mixed problem of EBIT, EPS, MPS analysis and leverage. Okay, EBIT, EPS, MPS analysis and leverage and cost of capital. மூணு சாப்டரை மிக்ஸ் பண்ணிட்டு ஒரு ப்ராப்ளம் கேட்டிருக்காங்க. ஆனா காஸ்ட் ஆஃப் கேபிட்டல் இன்னும் உனக்கு தெரியாதுல்ல, ஓகேவா? ஆனா தெரிஞ்சா போட்டுரு, தெரியாதுன்னா யூ லீவ் திஸ் தேர்ட், we will do it afterwards. ஆனா ஃபார் நவ், ஓகேவா, ஃபார் நவ் 4 problems, but 3 is important. You have to do fourth time கிடைச்சா போடு, ஓகேவா? But 3 definitely you have to, okay? Those 3 problems definitely, okay, before coming to the tomorrow's class, I want you to do these 3 problems, okay? This fourth problem is an optional problem, but if you do, it will be good, okay? If you do this fourth problem, this will be good. Less important for exam perspective. Anal, this is a mixed problem. So there are chances that this problem can also be coined in the examination, or a similar problem can also be coming in the examination. Are you all with me till now? Okay, va? Till now, are you all with me? Or thumbs up matto kudu. Super. Okay, super. Sir, what we did in today's class? Okay, what we did in today's class? In today's class, first we understood what is the impact of preference dividend if leverage is coming. Correct? That is one special point we discussed. After that, we did 2 problems in leverage, we completed leverage. After we completed the leverage, we introduced it to EBIT, EPS and MPS analysis. Then we did some 2-3 problems in EBIT, EPS, MPS analysis. Then we did indifference point. Then we did financial break-even point. And then we solved a consolidated problem, okay, which was for EBIT, EPS, MPS analysis, financial break-even point and indifference point. So with this, okay, with today's class, our capital structure planning is completed. The only thing which is remaining in this chapter is capital structure theories that we are going to discuss post this. Anna, capital structure planning, the first half of capital structure is completed. The second half of capital structure we will be continuing in the upcoming lectures. But for now, okay, for now the analysis part is completed. Are you all comfortable with me? Okay, are you all comfortable with me till now? Okay, so till now 3 classes are over. Okay, 3 classes are over. We have learned a lot of points, solved a lot of problems, gained a lot of clarity. Am I correct? Hello? So what we are going to do, okay, what we are going to do is that, okay, so we are going to meet tomorrow, okay, we are going to meet tomorrow. One thing alone, okay, one thing alone, nadula ஒரே ஒரு நாள் மட்டும் I will be going outside, okay? So for that day alone, we will not be having class. But don't worry, it is not that not having class, it is cancelled. Either I will keep an extra class on Sunday, or I will pre-record it and I will give it to you, okay? Any 2 options I will do. Either if the time, okay, if time இருந்தா நம்ம என்ன பண்ணலாம், Sunday 2 sessions எடுத்துடலாம், ஓகேவா? So one session can be compensated, okay, maybe Monday or Tuesday, I don't know, I will let you know which day. But what we will be doing is that Sunday we will take 2 lectures, maybe one morning, one evening, or maybe மத்தியானத்துல இருந்து ஈவினிங் வரைக்கும் நம்ம கண்டினியூ பண்ணிக்கிட்டே இருக்கலாம், ஓகேவா? So anything we can do, whichever you are comfortable. Oh, and one class we can compensate for that, okay? One class we can compensate for that, okay? No class is cancelled. Are you all with me? Thumbs up kudu. Hello? Okay. Books has been dispatched, okay? Books, when I've asked, sir said that books is dispatched. So they are going to, maybe it will be reaching you in 1 or 2 days, okay? Books dispatch பண்ணிட்டாங்க, நேத்து தான் dispatch பண்ணிட்டாங்க, or இன்னைக்கு தான் dispatch பண்ணிருக்காங்க, they said, okay? So it will be reaching to you in, say, 1 day. If it is Chennai, 1 day. Tomorrow mostly you will get, or day after tomorrow, I don't know, Sunday vandruma, okay? So tomorrow or day after tomorrow, okay, you will get the books, okay? Maximum ilana I think nadula Sunday vanda maximum by Monday, but yeah, you will receive your books. It has been dispatched. I received an information that it has been dispatched, okay? Okay, so with this, so Google Drive students also, whenever I'm telling something that you have to do this, pause and do that. And if I'm giving you homework, be very proactive and do the homework, okay? Be very proactive and do the homework. So with this, I'm just okay, so with this, thank you very much, okay? So thank you very much.